Another update. Let's take a look at ES1 S&P 500 futures. Does look like it's producing a diamond top pattern, so wouldn't be surprised that we see a little bit of a push down here towards any of these fibs below before we continue on higher. When we take a look at the regular index on the at the wave count, we do see that we still have a little bit more upside to go. I don't think that the US stock market has topped out yet. Going back to 2021 here, or sorry, January 2022, we came down for a fourth wave. So this over here was our third wave, and then we came down in a bullish descending broadening wedge, bottomed out here in October 2022, had your A wave in the form of a leading diagonal, 3-wave move down, 3-wave move up, and then a 5-wave move down for your ABC correction for your B wave. And then for your C wave, you have a little bit of an extension of the C wave. So you have your wave 1, your wave 2, your third wave, fourth, and now for your fifth wave, it looks like we're producing a ending diagonal. You guys see this? And it will likely come to around the 6184 region before we top out. Okay, and the crypto market, it does follow the US stock market, and I think it's going to come down a little bit to these retracements before it continues higher, and then we have that blow off top to around 6184 to 6300. So around this region over here would be our danger zone. And the run up in crypto, it shouldn't take too much time. It actually happens very fast, and in a matter of 50 days, it can be all over. So that's I think a lot of people underestimate how fast it can go up. So this is the S&P 500. I do think that in the midterm, it may come down a little, break down from this diamond top towards any of these fibs for your B wave, and then come up for a C wave for your wave 3, come down for a fourth, and then finally your fifth to put in the top over here before we come down. Okay, so that's the SPX. Let's take a look at the Dow Jones Industrial Average. So actually the Dow Jones Industrial Average did make a new all-time high yesterday. So very similar concept when we take a look here at the daily time frame, going all the way back to 2016 or 2015, we have a third wave right over here, come down for a fourth, and then you just produce an ending diagonal for about almost a decade, right? So going back to 2016, right? 3-wave move up in your A, 3-wave move down in your 3-wave move up in your 1, 3-wave move down in your 2, 3 up in your 3, 3 down in your 4, and now we're doing a 3 up in our 5. And this wave 5 will likely come to around the 42.8 to 42.677 region for a little bit of an overthrow of this ascending broadening wedge that we have over here. Okay, so I still think that the US stock market has not topped yet. I still think that there's more room to go. We'll take a look at the Russell 2000. Okay, so the Russell 2000 seeing a little bit of rejection here this morning off of this order block, right? But eventually I do think that will continue up higher. I think that back here in March 2021 was our wave 5, and now we're just coming down, and then we came down for an A wave, and now we're just coming up for a B wave. We're coming up for our wave C of B, which would likely take you to around the $2,700 region, and then we would see a 5-wave move down from there for your C wave. Okay, so the Russell 2000 is bullish, S&P 500, Dow Jones, and we'll also take a look at the NASDAQ. Okay, so this is the NASDAQ, and yeah, we may come down a little bit in the short term, but eventually I do think that we still need to come in for this fifth wave here of this ending diagonal towards that 22,271 to 22,922 region before we see that breakdown. Okay, so this is NASDAQ. So the US stock market, in my opinion, it hasn't topped yet. We can take a look at equities as well. So this is equities. And equities is actually printing a Wyckoff distribution schematic, right? Right, so you have your 3 down in your A, your 3 up in your B, and then you come down in a 5-wave move in your C wave in a slingshot-like formation. It'll likely be like a whipsaw, right? Much like the 2008 subprime crisis. You see how fast we went down over here? Like a whipsaw, it'll be much like that, but a little bit more intense because this is a B wave going into the C wave, right? Right? So you have your 3-wave move down in your A, 3-wave move up in your B, and then you come down in a 5-wave move, 5-wave crashing structure within your C wave. And within this B wave over here, we're printing an ascending channel. So of your B wave, you have your A, you have your B, and then you have your C. Of this C wave, you have your wave 1, wave 2, 3, 4, and we have yet to print our wave 5 up here. Okay, so this over here would be your danger zone, and it would actually be your up thrust in phase B in Wyckoff accumulation. You guys see that? So it would be going up slightly above this high, and a lot of people here will think that it's going to continue to keep on going, but I think this whole move here from the subprime crisis is a corrective one. So that's equities. So equities hasn't topped yet. The U.S. stock market hasn't topped. We'll also take a look at WTI crude oil. I know it had a little bit of a 3% drop this morning in the New York AM session after the OPEC output report, but I do think that it will recover. So this is WTI crude oil. So we have a 3-wave move down in your A, 3-wave move up in your B, and now we're within our C wave, right? So if we go here on the 4-hour time frame, we do see that this is a little bit of a head and shoulders pattern, but let's be open-minded to the possibility of us having one more drive up here, right, to around that $96 to $100 region. Let's go up to the daily time frame, and this is what it would look like right here, right? You have your 5-wave move down in your wave 1 of C, and then this could be a 3, 3, 5 Elliott wave flat pattern before turning down for your 3 of C. But we'll see, right? Like if you go below this, if you have any daily or weekly closures below the 88.6% fib at 70.19, then that would be a little bit. Then it's likely that this over here would be your correction is finished, and this would be your bearish head and shoulders pattern, and then we would see the breakdown from there, right? So it's absolutely crucial for crude oil bulls to hold that $70.19 region. I do think that it will be defended, that level, but we'll see going forward. And I hope you guys enjoyed the video on the U.S. markets. Everything looks good for now. I don't think that the markets have topped yet, but I think we're very close. So I hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.